I don't want to get too into the nitty gritty on stocks. And yeah, real estate too. I've never invested in real estate, so I can't really speak intelligently about real estate. But in the stock market, I want to recommend a couple books and a video on YouTube, actually. But the one book that I just really love, I think it's the best investment stock market book of all time, is One Up on Wall Street by Peter Lynch. One Up on Wall Street, Peter Lynch, he was the mutual fund manager of the Fidelity Magellan Fund from the late 70s into the early 90s. And he just crushed it. Yeah, I think he got like 22% annualized rate of return. And as an investor, you kind of dream of getting 20%. Like anything, you're just a legendary investor if you can get 20% or more in the stock market consistently over time. Peter Lynch, he's sort of known as one of the greatest mutual fund managers of all time. And this book's, so well written. It's like very simple, but at the same time, there's a lot of like profound knowledge in there. So it's a great book if you're really interested in kind of diving into stocks to get started on. The next book I'd recommend is Beating the Street by Peter Lynch as well. Yeah, I'm a huge Peter Lynch fan, and I think his personality it just lends so well to like writing these books for normal people to learn about stocks. Yeah, he just has a great personality. But Beating the Street is a little more advanced, so it's a good one to read after One Up on Wall Street. It's sort of almost like a blow-by-blow of how he thought about analyzing certain stocks, like during his time managing the Magellan Fund, and how he sort of decided to buy them or sell them and kind of deal. When you have a sort of basic perspective from One Up on Wall Street, and then you get into the kind of blow-by-blow stuff on Beating the Street, it's a really powerful, I think, combination. Yeah, you get a good idea of like how to think about stocks to get a really good rate of return, I guess. Yeah, so those are the two books I would recommend to start out. And a Warren Buffett video. It's a Warren Buffett at the University of Georgia. I'm going to put the link in the description below. He's just on fire in this kind of Q&A. He hits on a lot of the kind of Buffettisms and just some of the profound investment knowledge, and he's got a great perspective. Like Buffett, he's really good at sort of thinking about how to identify special businesses. Because that's the thing about the stock market. There's like a ton of stocks out there. Like there's thousands, right? So how do you think about buying like the 5 or 10 that are going to be special? And I think Buffett really has a great like mindset around that whole, identifying special businesses to invest in. So in this Warren Buffett University of Georgia video, he's kind of talking to the students. And like at the beginning, it's like kind of 10 or 11 minutes or so of him sort of giving a spiel about like the person you want to be. And, watch that part if you want. But after that, he gets really into like, it's kind of like a Q&A. But there's some really great stock market knowledge after the kind of 10 or 11 minute mark, I think it is. But yeah, I think in my 20s, I probably watched that video like over 1,000 times. It was just like the thing I put on almost every night when I was just so interested in the stock market. So if you're really interested in stocks, I think those two books in that video is going to give you a nice little start. And, say you're out there though, and you want to invest and you want a rate of return, but you're not like super interested in stocks or like picking your own stocks. So I think in that case, you want to just invest in an index fund. So the way to do it is you want to open your own brokerage account. Because if you go to a bank and they kind of get you in a mutual fund or an index fund, it's going to be at a higher expense ratio. Like you're going to be paying them commissions that you don't really need to be paying. Like usually it's kind of in the 1% to 2%, maybe even higher than that of, they'll take kind of right off the top to get you into like a certain mutual fund or whatever. So in my opinion, you just want to buy an index fund, but you want to open your own brokerage account to do that. I think there's like TD Ameritrade is one brokerage. Interactive Brokers, I think, is a pretty decent one as well. It takes a little bit of time to kind of open those accounts and everything, but you're going to save a little bit on the commissions and the expense. Yeah, I think like if you ended up buying like the one index fund is the SPY. You own the S&P 500 index fund, and that's the one I would recommend. Like, yeah, the S&P 500 is the 500 largest U.S. businesses. And like, I do recommend just investing in America. I think America, it's like in their culture to make money. Like they're the best at it. They have all the best businesses. I feel like that's the best way to go, rather than like a lot of people would say, oh, you should invest in like the world index. So you own like businesses all over the world. But in my opinion, I just think America's like, it's in their culture to make money and to love money and to make more of it and to make high rates of return and all that. So I think you just stick with the S&P 500 index fund. Open your own brokerage account so you can do it at the lowest cost base possible.